Under the Entries tab, you can make the following settings. First of all, you can determine the fixed tick distance. This describes the distance in ticks from the calculated entry price to the actual order. The calculated entry prices are often located at highs and lows of periods. To prevent spoofing at these market-related points, the order is placed a distance of n various multiples of ticks away from the calculated entry price. When you activate distance on ATR, then this means that the tick size differences, for example between cheap shares and futures or Forex, are flattened. And this calculation is carried out according to the ATR 20. Under the distance ATR factor, you can determine the percentage of the ATR 20. And this is then added as a distance to the calculated entry price. However, if a fixed tick distance has also been entered, then the maximum of both calculations is always used. Check validity of order after n bars. Here, after a completed period, you receive a note if the entry order was not carried out within the multiple of the period, or if the initial stop was breached. If you enter 0, then you don't receive a note. If you activate the function auto-cancel invalid orders, then this has the following effects. If a period breaches the initial stop, and the entry order has not yet been carried out, then the order is deleted at the end of the period. In addition, the order is also deleted if the periods entered in check validity of order after n bars have elapsed. The function recalculate order size on entry order means that with the initially entered stop entry order and a corresponding follow-up modification to a market order, this is then confirmed, the risk therefore changes, and in this case the risk is then adapted and recalculated accordingly, due to the discrepancy to the stop price and the market price. The function show counter signals means that you will receive the corresponding counter signals, which you have defined, displayed in the message box when they appear. Synthetic orders on minimum stop distance has the following function. Several CFD brokers do not permit you to place the stop orders directly on the bid or the ask price, and demand a certain minimum distance to the market. To bypass this as elegantly as possible, activate this field. And you have the function that a synthetic order is placed directly on the market and is then carried out by the market. Using the reset button, you can set the setting back to its original state.